All righty. Good morning, everybody. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session, and it's gone. You guys ever seen that the South Park?
And it's gone.
And it's gone. It's gone. And it's gone. What? Anyway, what's up, Stel?
I'm good, man.
So today, it's as I was mentioning on the FA.C.E webinar this morning. I think we have to be a little careful just because of the move that we've seen in S&Ps and where the DSIs are for the S&P and volatility. And I think that's just a really big risk for the market right now. One of the things that we're seeing develop pretty aggressively is the move lower in the yen pairs. And look at the dollar yen. We are at channel support right now. I'd be a little worried about the yen pairs, especially if the dollar yen breaks back below 109, this 109.30 level, which I'm going to write down right now. Hold on one second. Let me just grab a drink of my coffee. Okay. I do think that that's a risk, and it's not, I don't know if it's going to be a yield related move, but I fear that it's going to be more of a it's going to be a stock related move, if you will. So let's write down that support. That's really key. If we break through that level, then I'm going to be a little worried about equities. At this point, we also have we are basically sitting on support here because this is the 109.80. We're there. And matter of fact, I think yesterday we probably wrote down 109.80. Yeah, we did. And we're here currently. And you can even see, like, yesterday we came down to 109.95, and we're just, this is all pretty key. So if we break through here right where we're at, that's going to take us down that 109.30. One of the things that you guys might be paying attention to is like the euro yen, can't hold above this 130 level. And then if you think about the yen, like the dollar yen moving lower, and you think about the euro dollar is right up against resistance here, if the euro dollar reverses and the dollar yen stays weak, that euro yen is going to get absolutely destroyed. So let's mark up. I mean, resistance for the euro is right here, 108.30, but I'm going to give it a little bit further. You can see this high right here. That comes in at 118.50. Let's just write that down for this morning. Oh, shoot, I forgot. Dollar yen. I'm sorry, 118.50. I still think it's bearish, but this is really key resistance. Let me go back to the dollar yen. I'm sorry. Resistance for the dollar yen probably be moved right back up to here. This is gonna be resistance now, in my opinion, and that's going to be 110.40. Okay. So, and this is still bullish, but if we break through that 109.30, then it's going to flip. Okay. Euro dollar, like I said, I think we're up against resistance right now. Just so you guys know, I sold some at 118.29. So I literally I got hit on that order on the FA.C.E webinar. I told you guys I was, going to sell some. I got hit there. So just so you guys know that. Support intraday, I'm not going to write down this 117.85, but you might want to. I'm more concerned with channel support should we get down there. As a matter of fact, this, let me just be a little bit more tidy in my drawing skills here. A little bit more granular. Let me see, clone. Okay. So support 117.70 roughly for today, I think. All right. Pound. So as you guys know from earlier, if you were listening to the FACE webinar, this was support down here, 138.25. We dipped to 138.16. I think this is key right here at 138.10, because if that breaks, this is a false breakout, then we end up doing that again, in my opinion. So 138.10. Resistance is 139. Well, now it's 139.20. It was probably yesterday at 139.35, but now it's 139.20. All right. Aussie. I mean, I'm not going to rule out that we can't get a move to 77 cents, because we still can. You know, any which way we slice it, the S&P is still at all-time highs, right? I mean, let's not forget that. So the Aussie could very easily, you know, make its move just to squeeze anybody who's been shorting it, squeeze them out before moving lower. My opinion is, while we're below 77 cents, we have to stay, I think we have to stay bearish. I think this is the channel that is in play. Support, though, for today, in case we drop lower, it's going to be at that 75.60, which has been really important support for a long time. Okay. Kiwi. Kiwi's bearish while we're below 71 cents. Now, this 38% retracement's been capping it, and that comes in at 70.70. So let's write that down. We're going to stay bearish while we're below 71 cents. So right here, right? So support, I bet you that was a 50% retracement, just looking at it. It was. So support, I mean, I'm just writing down 69.40. All right. Dollar Canadian. Trendline resistance. And the highs, 125, let's just call it 125.80. That would have to break to open things up again to the highs. For now, 125.07. It's the 50% retracement right there. I'm just going to write down 125 as being support. That's it. Dollar Swiss. So dollar Swiss trading heavy alongside the dollar yen. So that's 50% retracement. 618 comes down at 93.10. I'd probably give it to that. So that's what I would think. So that's going to come in at 93.10. I still think it's bullish, but I'm not buying it yet. Resistance is all this previous support through here. That's going to be at 94.05, basically 94 cents. Okay. Excuse me one second. This dollar is still so strong. I mean, euro's still strong. That's what I meant to say. Dollar is actually kind of weak right now. So the dollar index, we're coming right into pretty key support here. And I don't know why this dollar is not refreshing. So weird. Like some of the data refreshes and some of it doesn't. I don't get it. Anyway, but this is working, and we are basically at support. That comes in at 92.40. It's actually 92.45, and we have to stay bullish because this is bull flag pattern. But we can actually, you know what? I'm going to redraw that. I'm going to the 618 is at 92.36. So I'm going to write down this 92.30, 35, bullish, 92.85 is the top of the flag. Wait a second. What is that? It's bad prints. Okay. Yeah. 92.85. Dollar Mexican peso is trading heavy again. It's amazing. It's like you know, was actually looking decent, and then as soon as North American traders came in, they just slammed it, just pushed it down. I thought this false breakdown yesterday was going to lead us to a little bit of a rally, but you know, we can't even get above this this 2040. So 2040 is resistance. Next support down here is the 127% extension of this move, which comes in at 20.07. US dollar, Norwegian krona, it's trying to really trying to break out here. But obviously we need to break above 856, but I'm still looking at 860. So let's just write down 860. Support, well, I'll call it about 846, that rising trend line, and we're just range bound for now. All right. Stocks are opening. Let's go over to the S&P. Okay. So I was, you know, I know we're at this big 161% extension, and you know, we can challenge 41.16. So I'm going to write that down. We have to stay bullish, but I'm going to monitor this trend line. I don't think it turns bearish below the trend line. We'd actually have to get back below 4,000 or 39.90. But with this trend line right here, just watch it. I think if we, start trading below it, it might let out a little of the air from the stock market. Just keep that in mind. but we got to stay bullish while we're above 39.90. Okay. Okay, here's gold. Same crap as yesterday, right? $17.60. It's all that previous support, current resistance. And then support is 1680. And we're still bearish while we're below 1760. Same thing as yesterday. Silver, just kind of grinding higher, but I'm going to write down as, you know, $26.80, $23.80, and that's it. Range bound.
You know what they say, Blake? I'm gonna make a sound. Beep, beep, beep. I'm just backing up my truck.
All right. Well,
prices.
you know, hopefully we can get down to $12 for you, so you can really back.
No. You're right, though. It's difficult. It's trading sideways.
Yeah, it is. It's just sideways. There's nothing to really do with silver right at this moment in time. All right, Bitcoin's still struggling here. 60,000, and again, 54,000, and then 50,000. It's the same thing as yesterday. So 50K, 54K, and we have to stay bullish while we're above those levels. But I am genuinely like kind of worried about Bitcoin because it's just not rallying anymore. So it's stalled. It's stalled out, even with Ethereum breaking out. So, you know, just keep that in mind. All right, guys, this is your bias chart, and I'm not sure if Steve's going to be around.
I'm here, mate.
Stelios, what's up, man?
Oh, good, man. Oh, good. Just watching these markets go higher and higher.
Yeah, I mean, the equity markets just continue to go up, and it's
it is amazing, isn't it?
What's that, Steve?
It is amazing. It is a spectacle.
It really, I mean, I don't know what else to say other than every day I'm like, wow.
Yeah.
You know, but hey guys, I'm gonna take a little bit of a break. I'm gonna pass it over to you all, and I want to thank everybody for tuning in today. Your bias chart should be updated. I'm sure Stelios has updated it now
already. Yes,
because he's good like that.
Oh yeah.
Oh, look at it, it's already up there. So Steve, still, it's all yours. Thanks everybody for tuning in, and I'll see you guys in a couple hours for the daily roundup.
Thank you, mate.
Thank you, Blake. Thank you.
Thanks, guys.
So same bit of the same in the markets. One thing we didn't mention on FACE was I was reading Credit Suisse. They're taking a $4.5 billion loss on tied
it's
up
okay.
today.
Somebody else is going to pay for it eventually.
And it's amazing because, you know, I was there when the 2008 crisis happened. I was working at Merrill Lynch at the time. We almost went under. We were lucky enough to be bought by Bank of America. And I remember the big bosses who I spoke to, you know, not the CEO, but some of the pretty big guys. And they're saying, oh, you know, going forward, risk management is going to be #1 priority and compliance and everything. They hired all sorts of people and all that. And literally 13 years later, the same stuff is happening, which is incredible. But it just shows you, right?
That's the fate of human history. Keep repeating the same mistakes, especially as long as there is no consequences to them.
Yeah, and the market they have very short memory, and you know, obviously the first couple of years after the crisis, things were tough, and then they start making money again, and then you go, okay, we take a little bit more risk and a little bit
Yeah,
more risk
because you know how it is. Because the competitors are taking more risk, and don't
yeah,
worry,
exactly.
the central banks have our back, so on and so forth. Blah blah blah.
Yeah, and if you underperform the other banks, then you're in
Yes,
trouble.
then
So
your clients, your rich clients that
yeah,
have accounts in more than one banks will be like, why should they keep money with you? I mean,
yeah,
they
it's
made me
amazing.
more money there,
Yeah,
wherever there is.
yeah.
Yeah,
Anyway, it is what it is. But that was a big hit, you have to say.
for sure. And the only thing
Yes.
that's going to happen is they're sending away a couple of people, and you
Yeah,
know,
yeah.
it, everything
Their
is fixed.
their chief risk manager quit, and one other person quit. Anyway,
Yeah.
I'm sure we'll see the same again and again. Data wise, we had very little. The RBA kept rates unchanged. It's nothing major in the statement. Quite boring. We have Jolt's job openings in the US in a few minutes, in 20 minutes or so, but really very little to change the dynamic of this market. So, I wouldn't be surprised if we close higher again today and tomorrow. And I have friends who tell me, they ask me, what do I think about equities? And I say, look, there's no way I'm going to buy, but there's no way I'm going to short either. So I just don't have to.
Yeah, indeed.
And there's exactly what you say, and they're like, man, you can't not have a position on equities. I said, no, there's so many other markets you can be in. You can't be in everything. So if you want to gamble, of course you can go in, but just
FOMO, bro, FOMO.
it's FOMO. I'm actually wearing at this moment the ForexAnalytix no FOMO t-shirt.
Yeah. You
um,
need to have your daily reminder.
yeah, exactly. But otherwise,
Yeah.
I see nothing
Extreme
different.
FOMO.
Yeah, there's nothing different from last week. We had the non-farm payroll print, which was very strong, and given the way markets have reacted over the past years, where when things are really bad, we're like, oh, more stimulus, so stocks go up. I mean, you would expect when things start to turn well, that risk should get sold, but obviously it won't. So I don't know what to do with it. I really don't. I really don't.
Yeah. Patience. That's the
Yeah.
only thing you can do with it. Remain patient.
Yes.
Now, nothing has changed essentially since yesterday. What we were talking about yesterday, that something has to give, did happen. The dollar did. So, initially we had both of them up. I mean, the dollar was, you know, more or less unchanged, and equities were up. And when the session actually, the US session actually opened, and equities not only didn't give away their gains, but actually accelerated higher, then inevitably dollar had to be the one that gave, as it did. So what happened in essence is that we got um, some extension. We got a daily close above the channel we were talking about yesterday in the cable. We got more of a rebound from the euro, which had found support at this trend line support. We got a rebound in commodity currencies. Nothing to write home about having to do with commodity currencies. Um, but it still was a rebound higher. But having said that, no real break higher. So other than the cable, nothing else has really broken to the upside. And for the cable, as I said yesterday, you, under normal circumstances and a daily close, above that channel would be a very significant technical development. But given the fact that yesterday, we had, like, in essence, holiday markets, I consider it, less of an important development. So let's see if we actually, because it is under pressure today, let's see if we can actually close above that channel today as well, which is not a market holiday, in a half holiday or whatever. And then we can further talk about it tomorrow. Now, having to do with crude oil, we did get more or less a breakdown yesterday. It was very close. we're seeing an inside day to day. So, my thesis still remains that if there is one thing that looks like it's heavy at the moment, that is crude. So, and it has already proved that it can have a corrective move without equities following. Now, of course, sometimes crude is leading equities, but I have to admit that so far I'm not seeing any signs that equities are about to roll over. Now, metals did uh, uh, let me start from gold. So gold has closed above this intermittent trend line resistance, which is like the first area I was looking for, but it still hasn't broken out from this horizontal support resistance area at 1747, 1750. So that's the resistance area. I think that's going to be important because if we break through this area, then we trigger a double bottom, right? There you see. We had that double bottom at 1675. We break above this high and we trigger the double bottom, which would point to an extension of like $75 roughly, right? We haven't done that yet. Same thing with silver. Silver has seen a reaction higher, but it hasn't yet broken out of this trend line resistance. Now, there's an alternative interpretation to the channel, and it's this one, right? So keep in mind that this can have a bullish development, but we need to break through this trend line resistance. So in both gold and silver, we haven't made a bullish move yet, but we're rather close to key levels in both cases. Now, the same doesn't apply to platinum. Platinum seems to have already broken out, so keep that in mind. The same also doesn't apply to palladium because palladium broke out some time ago, and now it seems to be also breaking up from this flag. Copper also broke out yesterday from this trend line resistance. So, the vast majority of these point to further dollar weakness. And as I've said, the only thing that can come as an obstacle to that is equities rolling over. But if we take the S&P, which is like the global barometer for risk, even in the short term, I still see the potential for more upside, right? We have the first 161.8% extension of this move lower, which comes at 41.14. And we also have the 161.8% extension of the COVID move lower, which comes at 41.48, which also confluences with this larger ascending wedge. And we also have the potential of even an overthrow from that, right? So I don't yet see like a, reversal signal as we speak. Whenever I see one, I'm not going to hesitate. You're going to be the first ones to know. But until that happens, I really think that it's a very dangerous proposition to try to fade the prevailing trends because they're clearly strong, right? So yeah, I don't think I have anything else to add. I'll be more than glad to go over your questions and see if you have something else in mind and you want us to see anything. Stelio, I don't see any questions. Can you confirm, please?
Nope, nothing.
Okay. Going once, going twice. Okay, so that's it for today. Have a wonderful
okay.
rest of the day.
It's been quiet, so it makes sense.
It has been. It has been. And no real development, right?
Yeah, exactly. Okay, thank you, Steve. Thank you, everybody.
Okay,
Have a good
thank
one.
you, guys. Bye-bye. And gals. Bye-bye.